So our next guest says a lot of the good news is already priced into stocks, making further upside harder to come by, while high valuations mean high downside risks if earnings disappoint. Joining us now for more is Tom Hulick, CEO and managing partner at Strategy Asset Managers. Tom, to what degree do we need to think about international markets as a risk versus an opportunity? I know you like Mercado Libre.
We do, and thank you for having me on set today. And nice to be here. We like the international markets with the dollar depreciating against the foreign currencies. We see a tremendous advantage for some of the stocks that we've put our clients into. Mercado Libre is one of those, and that's an e-commerce company that also is very high into fintech. And
although it was trading down on some of the Brazil side, but it's Argentinian.
Well, Argentina is one of the benefits, the benefactors of it. There's a great turnaround story there from their country standpoint. But we really like this kind of stock because if you take a look at the advantages of the growth in Latin America, South America, it's far greater than we think in Europe at this time. So we like that.
And you mentioned top level, the weak dollar, which, I mean, look, this is one of the greatest quarters we will probably ever have for sheer dollar weakness. We were down 10%. What was it? 10% of the quarter was about half of that.
Right.
And it was 10% for the first half of the year.
Well, it benefits the United States to have the soft dollar from the trade policy. And if you think about it, the United States really is going to try to balance out the economic imbalance between tariffs and the taxes that are in place. But we're really set up to be in a very good position. We've been talking to our clients about how to look through the noise and try to advance beyond that and look confidently down the future. We think that there's a very, very strong sign for a next generation bull market ahead of us.
But at a minimum, a weak dollar should help all international stocks, right?
Yes, it should.
Just literally in translation effects. If I'm holding, the currency goes up, makes the performance better in dollar terms and so on and so forth. So is that already priced in, or do you think that, look at the international performance we've seen elsewhere? Should we expect similar in the back half of this year or no?
I definitely think it's priced in. I think that the market's gotten a little bit ahead of itself at this point, and we're going to take a breather for some period of time. But the outlook is very, very positive going forward. A weak dollar is not going to harm the U.S. I think it's going to be a benefit for net exporters, and you can see that right now with the earnings reports.
Speaking of looking ahead, bringing it back closer to home and thinking about the Fed, we know what President Trump wants when it comes to a new Fed chair, somebody who's going to get rates lower. Now, there's more than just the chair to working that out. How much influence do you think the next Fed chair, who the president presumably is going to appoint, is going to have over the rest of the voting members? And how does that factor into your looking ahead and perhaps optimism for the markets next year?
Well, we've been talking to our clients about Fed rate cuts as early as July happening. However, we've pushed it out towards the end of the year for 2 rate cuts. Having said that, when you look at what the shadow Fed Reserve Chairman could be in place and dictating the terms of what's ahead of us, we all know that the deficit is way too high. We know that the rates have to come down eventually. When it's going to take place, we really don't know. But impacting on earnings, I think that the CEOs of the companies that we own have already priced that in. And as the market takes a breather, we'll catch up towards the end of the year.
Yeah, we talked about some of the international. You also like Lilly, which has not been a great stock lately.
You're right.
Kinder Morgan, I mean, again, the energy space. So just what are you still like the whole AI trade, the AI story. So what are some of your most high conviction places to be?
Well, I think health and healthcare is a very important sector to concentrate on. It's specifically like biotechnology and pharmaceuticals. And although Lilly is kind of pulled back a little bit, they still represent a huge market with the GLP-1 drugs. And there are 1 billion people across the globe that are obese at this time that could benefit from it. And we're seeing additional indications that the GLP drugs can help with inflammation. And there are going to be all sorts of benefits from it down the road. And if you transfer that over to the pharma and the biotech area, I was just in Dubai a couple of days ago. We were talking about the next generation vaccines and personal cancer vaccines that are in front of us. It's an exciting time, and I think the stars are aligning for a huge advancement in biotech.